Are you ready to dive into the volatile world of stock futures? As we stand on the brink of potential all-time highs, the market is buzzing with anticipation. This week, key inflation data is set to hit the headlines, potentially steering the financial landscape in a new direction. On Sunday night, U.S. stock futures showed a slight upward tick, mirroring the strong performance seen in the previous week. The Dow Jones Industrial Average Futures gained 56 points, or 0.1%, while both the S&P 500 and Nasdaq 100 futures climbed by 0.1% each. These gains follow a remarkable week for the Nasdaq, which reached fresh closing highs, and the S&P 500, which came tantalizingly close to another record-breaking milestone. Even the traditionally sluggish Dow managed to finish on a high note, thanks in part to a resurgence in Apple stock, which had lagged behind this year. However, this optimistic trajectory raises some concerns among investors. With valuations at record levels, an uncertain macroeconomic outlook, and the lingering effects of tariffs, there's a growing debate about how long this bull market can continue to avoid major setbacks. Jay Woods, chief global strategist at Freedom Capital Markets, suggests that the market might enter a digestion phase, characterized by some sideways movement rather than continuous growth. He notes, this isn't necessarily a negative development. It's more about consolidation. Inflation data, particularly the Consumer Price Index, CPI, and Producer Price Index, PPI, set for release this week, will play a crucial role in shaping the future of interest rates. These figures are especially significant given their influence on the Federal Reserve's decision-making process during the September meeting. If inflation numbers come in higher than expected, it could dampen the current market optimism. Woods emphasizes the importance of the CPI data, stating, it will undoubtedly shape monetary policy. This timing is particularly poignant as it precedes the Fed's Jackson Hole meeting in Wyoming from August 21st to 22nd, which is likely to provide further insights and guidance on future monetary policy actions. Meanwhile, in a surprising turn of events, tech giants NVIDIA and AMD have struck a deal with the U.S. government. According to a report by the Financial Times, these companies have agreed to pay the U.S. 15% of revenues from certain chips sold in China, in exchange for export licenses to sell NVIDIA's H20 and AMD's MI308 chips in the country. This unprecedented arrangement, reportedly facilitated by a meeting between NVIDIA CEO Jensen Huang and former President Donald Trump, highlights the complex geopolitical dynamics influencing global trade. But here's where it gets controversial. The deal has sparked debates about the broader implications for technology exports and national security. Critics argue that such agreements could compromise U.S. interests, while supporters view them as pragmatic steps to navigate the challenging global economic environment. Adding fuel to the fire, NVIDIA has faced accusations from Chinese state media that its H20 chips pose a security risk. An article published on WeChat by Yuyuan Tantian, associated with the Chinese state broadcaster CCTV, questioned the technological advancement, environmental impact, and safety of NVIDIA's chips. The article suggested that the chips could include a backdoor feature, allowing for remote shutdown. In response, NVIDIA vehemently denied these claims, asserting that cybersecurity is a top priority and that their chips do not contain any backdoors. This incident underscores the ongoing tensions and mistrust in international trade, particularly in the tech sector. To sum up, as we await the release of crucial inflation data and navigate the complexities of global trade agreements, the stock market remains poised at a critical juncture. Will the current momentum continue, or will external factors bring about necessary adjustments? Only time will tell. What do you think? Share your thoughts in the comments below.